A big sell-off last week, panic selling really on Friday. What are you expecting? We've got modest gains so far. Are we expecting a bit of a recovery after last week's big losses?
No doubt that market sentiment is going to be swayed by what's happening in terms of Greece and in Europe. So the market's really going to move on those headlines. And over the weekend, we saw the G8 meeting and a shift from some of the austerity policies to more growth-orientated policies. All up, if we have a look at what might help our market along today, we did see a positive lead for gold as well as silver. Gold was up by 1.1%. Silver was up by 2.5% on Friday during the New York session. So our miners may receive a lift. We've actually seen BHP Billiton coming online with a rise of 1.1%. So the fact that our biggest stock is gaining quite strongly may help to support our market. The Australian dollar also just bouncing off those 6-month lows that we've seen. So any companies with revenue from offshore may be a beneficiary of that. And of course, we've seen some earnings out this morning. James Hardie, it's benefited from settling a long-term running tax dispute and a 5% buyback. So that stock may do well today. We've also seen Elders returning back to profitability with its half-year profit results out at $40.5 million there, and Campbell Brothers also due to give out its full-year results.
Julie, wanted to ask you about NAB because obviously there's been a lot of focus on the subordinated notes issue and very strong demand. In fact, NAB's having to double the amount it's offering.
Friday, this was being watched very closely to get a gauge of what exactly is the appetite for these subordinated notes coming out from the big four banks and also for safe haven assets. And it does look like safe haven assets very much in strong demand. We've seen NAB come out with its first retail offering since 1999 in this subordinated note issue. And originally they were planning to raise $500 million. It looks like they've now doubled that to $1 billion. And not only that, it looks like the margin will be on the lower end of expectations. They were indicating 2.75% to 2.85% above that 90-day bank bill swap rate, but it does look like they've come in at the lower end at 2.75%. Of course, these bank offerings have been very popular with investors because of the turmoil in the markets. ANZ earlier on the year was looking to raise $500 million through its own subordinated note issue, and of course it managed to raise $1.5 billion. Westpac had its convertible preference share issue. It was looking to raise $750 million. It managed to raise $1.2 billion. And even outside of the big four banks, we've seen Tabcorp trying to raise $200 million and actually managing to raise 25% more than that, with $250 million being raised. So altogether, it does look like investors still looking for those safer haven assets compared to Australian shares. And one of the beneficiaries have been these retail offerings coming through from the big four banks offering subordinated note issues or convertible preference share issues as well. So NAB looking to double that issue of $500 million to $1 billion.
Campbell Brothers with full-year results. What do you make of that?
Friday, while the full-year results, which should be released today, will be important, the market's going to pay closer attention to the outlook coming through from this company. Now, this is a mining services company, and in the last 52 weeks, its shares have done well, up by 25%, but in the last month, the shares down by 15%. And what's really been weighing on the shares is not only market sentiment, but also concerns around Europe, what that means for global growth, the growth numbers coming out of China, and of course, the comments coming through from big miners like BHP and Rio Tinto about reviewing their capital expenditure plans. So all up, the market's going to be watching this one very closely. We saw Boart Longyear, another mining services company, last week coming out at their AGM to reiterate some pretty strong guidance, and the market's going to be watching to see whether we see the same out of Campbell Brothers today. If we have a look at Campbell Brothers, I guess the major part of its earnings comes from its ALS laboratory. It's responsible for more than 80% of EBITDA. And if we have a look at this business, it's analytical testing for those mining and exploration companies. We are expecting to see net profit of between $200 to $220 million, and that should be underpinned by its minerals division as well as the acquisitions it's made. But more importantly, the market's really going to be watching the commentary and whether it can do what Boart Longyear has done and reiterate strong guidance over the next 12 months.
Really, you need to act now because, BHP, Rio at these levels, those sorts of stocks, that's not going to stay at those sorts of levels for that long.
Friday, we've seen this before, the market around the 4,000 levels for the ASX 200, and we know that when the market gets to around those 4,000 levels, that we do start to see some strong buying coming through from those fund managers transferring their cash back into Australian shares, and we're starting to see a little bit of that now. On Friday, we saw the Australian market closing at 4,053 points. It does look like if we do see those European concerns staying in the market, though, it may be some more weakness for the markets. While the market looks cheap at the 4,000 level, we know that things can get much cheaper, and during the global financial crisis we actually saw the ASX 200 around the 3,400 point level. So while BHP does look cheap now, it really does depend on Europe, and it is so important to global growth, especially for China. Europe is historically China's largest export market, so it's not surprising to see a lot of concern around Chinese growth given the problems that we are seeing in Europe at the moment. But investor sentiment driven by Europe, if we start to get better news flow coming out of Europe, that would be a positive for markets.